Hey everybody, it's Will at VIP Mortgage, and it's time for your local lender update. Interest rates are higher this week, and noticeably so. We haven't seen them this high really since middle of summer last year. Well, Thursday and Friday last week, we saw quite a bit of negative reaction in the bond market. And Thursday, I thought, because we were close to the edge of the negative movement that we have seen really since the start of the war, I figured it'd bounce off and come back, and it didn't. It got worse. And then this morning we saw a little bit of an improvement, and then it got worse again. The experts seem to think this is related to market uncertainty with the new Fed chair taking office on Friday. I think that might have something to do with it, but I think it has more to do with a policy that nobody's been talking about, to be honest. I knew a little bit about it, but I didn't know the extent, and that is a version of quantitative easing. It's not the same policy as quantitative easing. That's when the Fed buys its own debt. But what they've been doing is buying a lot of private bank debt, injecting liquidity into the banking market because they're worried a little bit about the banks being able to lend to each other, right? Because that's how we got a credit freeze during the '08 crisis. And everybody knows that Kevin Warsh, the new Fed chair, is not a big fan of the Fed injecting money into the money supply because almost without fail, that causes inflation and devalues the average consumer's purchasing power. So I think it has more to do with that and more to do with people thinking that this cycle really since Trump's first term, where when the government sees an economic problem, they inject more money into the economy, either through government spending or quantitative easing or printing or whatever they're doing. And I think that the market is a little bit skittish because they think that kind of action is either going to slow or end, which long term would be a good thing, but it's going to be a little rough in the bond market. The other thing people are really watching is the stock market too high? Or are we due for a correction? If we get a significant correction, that would actually help mortgage rates because most of the time investors move their money to the bond market, which brings down prices. So a little bit of a complicated week. Long story short, rates are higher than they were really since the beginning of the year. You'd probably be a little surprised if I give you an actual rate quote right now. That being said, there are some forces that could help bring those down, but the biggest shoe to drop is what are we going to see in Iran. If there's anything I can do for you, give me a call, 719-232-7553.